I know people get frustrated in sideways markets. It's just the nature of the beast. It does nothing, corrects for a while, and then explodes out of the traps. And we're kind of in that phase now that I'll talk to you about. When we talk about debasement of currency, you can't see this very easily, but at the top here is...
Bitcoin Zela stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zela today and enjoy the new edge. Raoul Pal dives into the wild ride of the banana zone, where crypto moves fast and gains go parabolic. We'll explore what's next, so buckle up and let's dive in.
These are all of the asset classes that we monitor at Xpan, my asset management firm, and you can see that most of the returns of US small caps, REITs, treasuries, preferred stocks, high yield bonds, they're all annualizing at less than 10% a year returns. So owning those assets makes you actually poorer because of the debasement. Once you get to the S&P 500, you're at 12%. Basically, you break even. Divide the S&P 500 by global total liquidity, it's basically a flat line. So owning US equities in the broadest sense makes you no money either. So all of the millennials have been piling money into 401ks and not getting richer. So none of their 401ks will buy them as much of a house and stuff like that. Only when you get to technology investing do you start beating the benchmark. And so this realization from the Everything Code is debasement of currency. There are only two assets that matter in the entire world. One is technology, and two is crypto. And crypto dwarfs everything else. It is the greatest performing asset in all recorded history. We've never had anything like this before. So here's Bitcoin since 2012, 130% annualized. That's including 3 gigantic drawdowns. Ethereum at 113 and Solana at 142. So, and Solana obviously starts later. So the magnitude of the returns is enormous. The volatility we have to stomach to do it is the game. And it's a matter of, I've told everybody about the don't fuck this up thesis of how to deal with volatility, how not to lose control of your tokens, because this stuff compounds over time. Bitcoin since 2012, 27.5 million % returns. Again, nothing ever has remotely come close to this. So that's the opportunity. And we said the tech stocks, they're great, and Bitcoin or crypto is great. Fantastic. Then you look at the NASDAQ versus Bitcoin, it's down 99.94%.
Bitcoin is gaining serious momentum again, recently breaking above $97,000, its highest level since February, and showing signs it could soon smash through to a new all-time high. One of the strongest signals behind this surge is the dramatic drop in Bitcoin supply on centralized exchanges. With just 1.42 million BTC now available, the lowest since late 2018, the market is experiencing a major supply crunch. At the same time, more than 18 million coins are now held off exchanges, a clear sign that investors are holding, not selling. Big players like Michael Saylor's firm, which owns over 2% of all Bitcoin, are still buying, and other major holders like Coinbase and Tesla haven't shown any signs of unloading. At the same time, institutional and retail demand keeps rising. Bitcoin ETF have seen consistent inflows, adding over $40 billion in assets. BlackRock, Fidelity, and ARK all have huge stakes, suggesting strong long-term interest. Technically, Bitcoin has broken through key resistance and is riding an ascending trend line. With all these bullish signals in play, the path to $100,000 and beyond looks more likely than ever.
Crypto is a supermassive black hole that simply outperforms and sucks every other asset dry. This is the big one, the biggest one we've ever been given, the greatest macro opportunity of all time. We've got the central banks debasing currency, which is giving us a gigantic tailwind. They don't want the system to break, so every time something happens, they inject more liquidity. So they're giving you free money. And to take that money, you need the volatility. So what causes the volatility? Well, it's actually driven by liquidity again. Once you come to narrower time horizons, liquidity changes things. So we've just gone through a 3-month period of the market feeling shit and everyone's saying it's all over, we're never going to have alt season, everything's terrible, we're all going to die. What was actually happening was the fact that in Q4 2024, financial conditions tightened. And we measure financial conditions by the dollar, rates, interest rates, and oil. All of those went up in Q4, and there's a 3-month lag, and it drives it. So here's a simple way. We're now seeing people saying the economy's slow, shipping slow, all of the tariff stuff. The market's priced in this tariff stuff last year once they saw the probabilities of a Trump re-election. So what we've got here is the economic surprises index of the US versus other countries in the world. When it's going down, the US is underperforming in economic surprises term. When it goes up, it outperforms. It's basically just following the dollar and rates. And what it's saying is whatever noise we're seeing now in the economic data, which is some of the tariffs-related stuff as people have built inventories very quickly, liquidity is going to completely erase that very quickly. We saw it exactly in 2017 when Trump imposed similar tariffs, similar backdrop. The dollar and rates fell. And what we saw back then was the same collapse in the economic surprises index. We had talks about recession all over again back then. Trump's going to create a recession. Then what happened was the liquidity conditions drove all economic data higher.
What would happen to Bitcoin and XRP if Satoshi Nakamoto's identity were finally revealed? That's the big question posed by Edward Farina, CEO of Alpha Lions Academy, in a recent viral post. His tweet featured a dramatic image, a hooded figure labeled Satoshi's identity revealed at the center, with a huge red Bitcoin candlestick crashing downward and a soaring green XRP candle on the other side. The message was clear: Bitcoin would tank, while XRP would rally. Farina suggests that if Satoshi were unmasked, it could spark a crisis of confidence in Bitcoin. Whether it's fear of centralized control, legal exposure, or even links to government agencies, the mystery has always protected Bitcoin's mythos. XRP, on the other hand, is pitched as the compliant, utility-driven alternative that could thrive in such a scenario. The crypto community's reactions were mixed. Some saw it as a dramatic oversimplification, arguing that Bitcoin still leads the market, and any crash would likely take everything, including XRP, down with it. Others raised long-standing concerns over institutional distrust, pointing to how anonymity around Bitcoin's origin remains a sticking point. Still, many dismiss the idea entirely, saying Satoshi identity rumors have come and gone without real impact. Yet Farina's speculation has reignited the debate, showing how deeply the crypto world still grapples with the mystery behind its most powerful name. And do not forget to subscribe to Bitcoin Zela. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.